This is going to be the best performing big cap tech stock this year. I still believe that.
They're going to be 500 EVs on the road by 2025. And yeah, they deserve a lot of credit for creating the market, basically. But we need to bring some rationality, some logic to valuation. And, you know, Toyota's smaller market cap, and Tesla doesn't have anything that Toyota doesn't. That's kind of irrational valuation in my view.
In this video, a mixed bag of vastly differing opinions about Tesla, Elon Musk, and Tesla stock, which, for the record, is up a mere 64.57% year to date. That's right, Tesla stock up $69.80 since the beginning of this year. Closing price on Tuesday, the 3rd of January, $108.10 per share. Closing price on Friday, the 27th of January, $177.90. Who could have seen this coming? Oh wait, someone did see this coming. And that may or may not be the subject of today's exclusive Patreon video, which discusses NPCs, the hive mind, Tesla Q, and emotions. If you think you can handle this cold, hard dose of reality, head over to Patreon with your card in the corner or the link in the pinned comment. If you're a sensitive snowflake, however, probably wouldn't watch that video.
Here to debate whether now is a good time to buy and own Tesla shares, Garrett Nelson of CFRA. He has a $210 price target on the stock, rates it a strong buy. And Craig Irwin of Roth Capital, he has an $85 price target and rates Tesla a hold. Craig, how long have you been that bearish on Tesla? It's a long way from your price target.
Yeah, you remember it's been about close to 2 years that I've been saying as Tesla became egregiously overvalued, that it was not long-term sustainable. They do not operate in a vacuum. They're going to be 500 EVs on the road by 2025.
Link in description. So quickly, just want to add a few comments here. If you don't like thinking and prefer to avoid thinking because either you don't like it and or it hurts, you may hear Craig's comments and your immediate assumption is, oh yeah, 500 competing electric vehicles on roads. Oh, Tesla's fucked, aren't they? But as we know, it's about quality, not quantity. Tesla's Model Y is now the world's 4th best-selling vehicle. Won't be long before it's the 3rd, 2nd, and then the number 1 selling vehicle on Earth. Then it'll be selling twice as many units as the best-selling vehicle on Earth has ever sold in a single year, then 3 times as many and probably close to 4 times as many as well. If there are 500 shithouse electric vehicles available for consumers to buy in the future, that has no bearing on whether or not Tesla's category-killing vehicles will continue to sell. There's probably 500 different smartphones available, yet still, Apple takes the majority, the lion's share of all the profits in the smartphone market, with just one, the iPhone.
And yeah, they deserve a lot of credit for creating the market, basically. But we need to bring some rationality, some logic to valuation. And, you know, Toyota's smaller market cap, and Tesla doesn't have anything that Toyota doesn't.
Craig, in all seriousness, my man, you've got to get some better material than that. Craig's been regurgitating this statement now for months, maybe a few quarters. Toyota has nothing that Tesla does have, and Tesla has everything Toyota doesn't have, including compelling electric vehicles that they're making profitably at scale and that are selling like hotcakes. Toyota has incompetent leaders. Toyota's entire internal culture is a bunch of yes men, a gigantic circle jerk. Yes, boss, great idea, boss, I like you, boss, yes, good idea, boss, yeah, you're right, boss, yes, I agree with you, boss, yes. Toyota's plans for the future is to make, I kid you not, internal combustion engine vehicles, hybrid electric vehicles, hydrogen full cell vehicles, and electric vehicles. They have no direction, no idea what they're doing, no longer any of the world's best engineering talent. Don't get me wrong, Toyota, great company in the past, great products in the past. I've owned a couple of Toyota vehicles in my time. Great, reliable, and economical. So Craig's 2 opening points why he's particularly bearish on Tesla. 1, Tesla's in big trouble when these 500 shitty electric vehicles are finally available. 2, Tesla doesn't have anything unique that Toyota doesn't already have themselves, like a fleet of robots collecting data to train their autonomous software. Toyota definitely has that as well. They also have Elon Musk leading the company. They also have the world's best engineering talent. They too have also got gigantic castings. They too have also developed the octovalve heat pump. They too are also producing around 2 million electric vehicles per year as I record this at an annualized rate. Compelling and highly profitable electric vehicles, for which order flow is now approximately double current rates of production. These are Craig's opening points. This is the best material he's got. There's zero chance this guy believes what he's saying and he's taking himself seriously. There's got to be something going on here behind the scenes. I just don't think it's possible for anyone who's even slightly informed on this. You don't even need to be well informed, just slightly informed on this. Who would agree with Craig's comments that Tesla doesn't have a single thing that Toyota themselves don't also have? So why does he say the things he says? I still don't understand.
That's kind of irrational valuation in my view.
Garrett, do you think that Tesla has something that Toyota doesn't have? That has been the bull case for a long time, that Tesla has something that nobody else has.
Now, before Garrett answers, I'm going to hypothesize that if Garrett has something that Craig doesn't have, a brain, he's going to disagree with Craig on this point. He's going to suggest that Tesla does in fact have many things that Toyota doesn't have. Over to you, Garrett.
Absolutely, we do. And it's their battery technology, it's their innovation, it's the fact they produce the two best-selling EVs in the U.S. by a wide margin, the Model 3 and the Model Y. And, we view the stock's valuation as highly compelling at these levels. Remember, Tesla fell by 65% last year. It was a broad-based EV sell-off, so its decline wasn't as bad as some of its peers, such as Lucid and Rivian, both of which fell by 82%. But we feel that so much of the headwinds are priced in at these levels that it's really a compelling buy, and investors will be glad that they bought this stock at these levels, looking down the road, 1, 3, 5 years from now. I
am in 420% agreement with Garrett on every point he made there.
There are some headwinds, though, you acknowledge, Garrett. What are can you summarize the top three headwinds? I mean, is it good for market share that you see prices discounted? Is it are supply constraints, are those still affecting deliveries so that they're not going to be what had been promised? And what about Mr. Musk's other interests, if you will?
No, I think you just reeled off the major concerns there. It's really demand has been a major worry of investors. Production, Tesla's quarterly production has exceeded its sales for the last 3 quarters, so they've built some inventory. But what they've done to respond is cut prices, which they just announced a week or two ago, and also the company's lower priced Model 3 and Model Y vehicles are now eligible for a $7,500 federal EV tax credit. So we think those two things are really helping stimulate their sales. We're seeing that anecdotally in some of the sales data that we've seen recently. As far as Elon's interest in Twitter, that's still the number one headwind for the stock, just the uncertainty regarding whether he might possibly sell additional Tesla shares at some point down the road in order to continue to fund Twitter's operations.
Our next guest recently sold out of that stock, but got back in on Monday. Joining us now on the news line is EMJ Capital's Eric Jackson. Man, you couldn't stay away, huh?
No, it was too good to pass up, Scott. I've said on your program before that I thought that this is going to be the best performing big cap tech stock this year. I still believe that.
Now, I don't know whether or not Tesla stock will outperform other mega cap stocks this year, but I'm pretty confident that Tesla, the company, will outperform other mega cap companies this year, growing revenue at an insane rate, making more progress with real world AI, further innovating in terms of manufacturing, and further extending their lead. Whether or not the stock tracks Tesla's actual progress is an entirely different matter, but I won't be surprised if it does.
I thought that they would come through with the delivery numbers for this earnings, and that's what they did, so I had to get back in.
I mean, I think you were looking for 1.9 million on the delivery number. They actually seem to be suggesting 1.8. That make you rethink any of this?
I don't think so. I mean, I agree with Dan Ives from before when he said, that was the bogey that I think most people were looking for. I think they're going to get to 1.9 and probably exceed it. At the end of the day, that's the number that I care about the most with Tesla. It's not gross margins because,
Why?
And I think Elon Musk said this. Well, I think Elon Musk said this a few days ago on a Twitter Spaces that in the recessionary times, you want to get units out there in people's driveways. You want people to have the product because later they can upgrade to all kinds, full self-driving and other software add-ons, but you need to have them with the product.
This guy gets it. It's nice to see the narrative. People are finally starting to wake up and understand. The Tesla vehicles are active users. They're part of their install base. In the future, at any point in time, any owner of a Tesla vehicle, should they choose, can hand over a shitload of money to Tesla in exchange for some form of software delivered over the air. such as the $15,000 FSD option, but that's not the only option. Especially in the future, there'll be subscriptions, entertainment, communications, information, all kinds of stuff in a Tesla vehicle that consumers will be able to pay for, including performance upgrades, new software features, new services, and loads more. To their credit, Morgan Stanley have actually been discussing this for a couple of years. Average revenue per user, blah, blah, blah. This is super important. Think about it like this. Imagine a Tesla vehicle instead is a game console. It's an Xbox or a PlayStation. Now that a consumer owns the hardware, in the future, surprise, pretty high probability that this consumer will actually pay money for software. The difference, of course, in the case of a PlayStation or an Xbox, if this is a third-party developer, the producer of the console isn't really getting a cut. However, in the case of a Tesla, guess who's getting a cut? Or the entire amount? That would be Tesla. One of the most important things to keep track of is Tesla's global vehicle fleet. If you haven't already seen my Tesla valuation model, check it out on Patreon, available to supporters at the investor level and above. You can see my own estimates for Tesla's global fleet size over the next decade. This has been in my valuation model since day one because it's so fucking important. My best guess, around end of decade, maybe a couple of years later, Tesla's global fleet will be approximately 100 million vehicles. That makes the math pretty simple. If you want an absurd lowball, why not imagine what would happen if, for example, the average owner of a Tesla vehicle spent a mere $10 per year on software, which is effectively pure profit. That'd be $1 billion straight to the bottom line. $1 billion profit. How about 100? 10 billion. How about $1,000? $100 billion. Now, I know $1,000 sounds absolutely absurd, right? Well, could sound a little bit absurd, but what if Tesla has an FSD subscription where you can subscribe for, let's say, $200 per month to upgrade your vehicle, improve its capabilities to the point where it can drive you safely from point A to point B and you no longer need to pay attention, turning your dead time into productive time. Did you know that 200 times 12 is a shitload of money? Like $2,400 a year? Bear with me here, ladies and gentlemen. This is not a prediction, but just an extreme example to illustrate the point. If 100,000 Tesla owners in a single year each, on average, spent $2,400 on software, just $200 a month, maybe it's an FSD subscription, maybe they're downloading games, content, who knows? Again, not a prediction, just illustrating the point. That would be a quarter of a trillion, with a T, not B, trillion dollars of pure profit straight to Tesla's bottom line. Hopefully this illustrates the point, the power of Tesla's install base, the global fleet. And this would probably be an awkward time to mention robotaxis, right? Because Tesla's going to be taking a cut of every single robotaxi fare that takes place on Earth in a Tesla vehicle. Yeah, let's not go there. Numbers get too ridiculous. I'll get laughed off the internet.
It's no different from Netflix announcing the good subscriber numbers last week. That's what got the street excited. They didn't care what plan that they were on. It's just getting the subs.
I understand. I mean, but there's two different things, right? Good for sales is not necessarily good for stock, right? If you do have to take a hit in margins to get more product out, ultimately that factors in and filters in to those important numbers.
Jesus Christ. I struggle with the extremely short-term and or short-on-brain cell perspective of most in the mainstream finance media. Clearly, Scott just doesn't get it, wasn't listening, or just doesn't compute. Analyst here just explains to Scott, Tesla's global fleet is a huge catalyst for future cash. Money printer. Insane profitability. I mean, I literally just went through the example. Like, I did the numbers just then. And in response to this point from the analyst, that Tesla is going to make a shitload of money by getting vehicles on roads and expanding their global fleet, the response from Scott, whose time horizon is shorter than a micropenis, it seems, is, but if there's not going to hurt their margins. This is what happens when you have a micropenis like time horizon. You get stuck on the short term and miss the big picture. Again, Tesla's global fleet expanding. Some folks are beyond help.
Well, I think the folks that say that, Tesla should be valued like a GM, I think they sort of fail to grasp that. I mean, this is a massive company now. It's not the Tesla of a few years ago. And that brings certain advantages of free cash flow and operating margins and so forth. And they just have a lot to work with. So they can take a hit on gross margins this year if they can maintain their leadership, and I think that's what they are doing with the price cuts in China. And these are the right moves. These are the right moves. They'll be ahead when things turn around.
I mean, the argument that Rick Heitzman was just making is, they deserve a premium to the car companies, and as I suggested, General Motors has a multiple in the single digits. So even if you double that, Tesla, where its multiple is now, is still so substantially higher than even that. Is that justified?
So I think what Scott was just asking there is, does it make sense for the stock market to value Tesla higher than a company that's currently worthless and headed for bankruptcy later this decade? I mean, I'm not like super smart or anything, but I mean, if one company's going bankrupt and the other one's going after multi-trillion-dollar opportunities and already in the dominant / unassailable lead, it probably does make sense that the stock market would value the company that isn't going bankrupt, that is going after multiple trillions of dollars in opportunity, a little bit higher than the company that's doomed. But hey, that's just my opinion, and I'm just some idiot on the internet.
However, for those questioning the brand image impact on Tesla hitting demand, here's what CEO Elon Musk had to say on the matter.
So I've got 127 million followers. It continues to grow very rapidly. That suggests that I'm, reasonably popular. I'm the most interactive account, social media account, I think, maybe in the world, certainly on Twitter. And that actually predated the Twitter acquisition. So I think Twitter is actually an incredibly powerful tool for driving demand for Tesla.
Well, for a closer look on Tesla and the road ahead, we have Ross Gerber, Kawasaki Wealth Investment Management. Good to see you, Ross. So I want to ask you about what Musk said there, because popularity on Twitter doesn't necessarily equal demand. What do you think about that correlation that he's making here?
Well, I think it's a little bit naive in the sense of, a lot of people follow people just to watch the train wreck, kind of thing too. So I don't think all my followers are actually fans of mine, to be honest.
Let's talk about this. Ross used the term naive as if to suggest that when Elon was commenting about how many people are following on Twitter, he also said, and also every single one of these people follow me on Twitter supports what I'm doing and none of these people dislike me whatsoever. If he had said that, that would be naive, but he didn't say that. He didn't mean that. He's not dumb enough to think that. So why say that, Ross? We understand. Once you have a bit of a profile online, you're going to have a lot of people interested in what you're saying just because they f***ing hate you. But why conjure up some meaning where there was none? There's nothing naive about what Elon said. Like I said, if he added, yes, every single one of these person loves everything I do, different story, but he didn't. So why would you suggest it's naive? I actually would turn this back and suggest that Ross's comments are a little naive, as if to suggest that Elon's dumb enough to think everyone following him on Twitter likes him. He's not that dumb.
On my Twitter account. So, you got to be careful with that. But I think his perception of Twitter's reach is a little off. Twitter actually has very limited reach, when you're talking about domestic viewers, like on the general public. In fact, most of the people I know don't use Twitter at all. So
I think Ross is a little confused here. He's conflating relative with general numbers. Yes, in relative terms, only a small percentage of the world's population actually uses Twitter. But in absolute terms, every single time Elon Musk tweets, literally millions of people, see every tweet that Elon posts. Millions of people. Tesla's global fleet today isn't even 3.5 million vehicles. Soon, maybe 3.5, getting close to 4. Think about that. More people see every single tweet Elon posts than there are current Tesla owners globally. It doesn't matter what percent of Earth's population is seeing these tweets. It matters how many people, what is the actual number of human beings seeing Elon's tweets. Let me bring up his profile to make my point. One of my favorite features that have been introduced since Elon Musk settled on the Twitter acquisition is the public display of the number of people who viewed an individual tweet. This meme Elon posted hours ago, 1 hour ago in fact, not even hours, just a single hour ago, has already reached 2.2 million human beings. Now it's true, there's about 8 billion people on Earth who haven't yet seen this tweet, but guess what? There's still 2.2 million people who have. This tweet was posted an hour ago. It's already reached 2.2 million people. This actually matters a lot. No one else on Earth has this kind of reach, period. Name a single other human on Earth who has this amount of reach. I'm not aware of any. 6 hours ago, Elon posted a tweet, has reached 7.4 million people. Posted yesterday, this tweet has reached 28.5 million people. You know how many people that is? About as many as live in all of f***ing Australia. Is there anyone else who can post a single tweet and reach the equivalent of the entire population of Australia in a day, in 24 hours? I'm not aware of one, and this kind of matters. Again, doesn't really matter about the other 8 billion people that didn't see this because almost 30 million people did. Another tweet, 24 hours old, 13.6 million people. Another one, 14 million. Another one, 6.4 million. Another one, 7.1 million. Another 2.6 million, another 28.8 million people. I actually think this matters a lot. In fact, let me tell you how much this matters. Things are going to get a little meta, but it's kind of important. I do need to make this point. I have a very small audience relative to Elon Musk, but in absolute terms, I still have a decent audience. There are plenty of people who hate me. I mean, a lot. I make it pretty easy. I'm always willing to share my thoughts and opinions, and I'm often right, which makes a lot of people very mad. The fact that I said that is going to make some of my haters really mad, but it's accurate. As a result of having this reach, the ability to instantaneously broadcast to an audience of 50, 60, 70,000 plus people on an average video, 250,000 or so subscribers, and about 500,000 unique viewers every single month on the YouTube channel, without needing to pay a cent, just by having this platform and this number of people engaging with and following my content, subscribe to the YouTube channel, etc. I've been able to grow my Patreon page just by having this audience. I can recommend products, services, promote my own Patreon. I mean, there's so much value there. I would sign up if I could, literally. The fact that I have a platform now, there are people paying attention to what I've got to say, means I can promote and sell things of value, just like Tesla. Their products offer a lot of value to a wide audience for free instantly. Does it matter that most people on Earth don't even know who I am? No. Does it matter that most people on Earth don't watch a YouTube channel? No. Because in absolute terms, every video I post will reach approximately 60, 70, 80,000 people. And if I have something of great value to promote, I can do so instantly for free. The same is true of Elon. I don't understand why people do not grasp how important and how valuable Elon's Twitter is. How in the flying can somebody not grasp that having 120 plus million people, in fact, fast approaching 130 million people following you on social media is an asset of almost infinite value? It doesn't matter that some people hate Elon. What matters is he's reaching so many people. Many of the people today following Elon on Twitter, especially the younger folks, are going to be future Tesla customers. It's difficult to value something intangible like reach on Twitter. But I personally believe that over the long term, in fact, just throughout this decade alone, Elon's Twitter audience will allow him to directly sell many tens of billions of dollars, perhaps hundreds of billions of dollars worth of Tesla products for free, versus most other companies on Earth who have to pay to manipulate people into buying their products via advertising. Elon is a master marketer. Many people, I think, suffering from SBS, I'm sure you can figure that one out, don't seem to get this. Another great example would be Mr. Beast, who, after dominating YouTube, is now creating multi-billion-dollar companies left, right, and center. No, literally, actually happening. I'm not making this up. Beast Burger now, a multi-billion-dollar valuation. He's got a chocolate bar, somewhere around that vicinity as well. Plenty of other projects in the works also. Mr. Beast, a YouTube creator with a large audience, is able to direct a small portion of that audience, small in relative terms, but massive in absolute terms, to go buy his burgers and break the record for the most revenue done by a new burger joint opening or some shit like that. Let me sum it up in 4 words. Attention is the asset.
So I think that's one of the reasons I've been pushing for Tesla to really start doing some traditional advertising and marketing, because I do think he is incredibly popular and successful at using Twitter as a tool for marketing Tesla. But there's also been some negative with him using Twitter as a tool. And I think that, once again, most people don't use Twitter, and Tesla's price cuts, if everybody knows about it, they're going to buy Teslas.
There will probably come a point in Tesla's future where it does actually make sense to pay for advertising. But if we work backwards from today, and since its inception, Tesla has sold every vehicle they've ever produced. I know this is crazy, but let me ask a question. If Tesla were to begin advertising, for example, now, how would that affect them? Well, they would spend money they don't need to spend, encouraging people to order products they can't yet produce because they're already volume constrained, production constrained, as we heard on the earnings call, about 2 times as many orders coming through every single day for Tesla vehicles than Tesla's actually producing per day. So obviously at this point in time, advertising Tesla products would not help the company whatsoever because they're already selling all their production. At some point in the future, this may change, but right now, if Tesla were to begin advertising, they'd be pissing away money. Let's come at this from a different angle. Something I'm sure we've heard on some adult film sets once or twice. I didn't say that out loud. How much money would a company need to spend advertising to reach a comparable number of people to Elon Musk just tweeting for free, instantly? No creative involved, no ad agency involved, literally just tap, 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 tweet. How much money would a company need to pay to reach the same number of people that Elon Musk can reach instantly for free every time he's sitting on the tapping away on his phone? Maybe that will provide some perspective to the sheer amount of value Elon's Twitter audience actually represents.
And I mean, you have to wonder who he's listening to at the moment when it comes to investing here. I mean, the earnings are speaking for itself, though, with this incredible beat here. But then, do you think that's enough to silence the bears at the moment? Enough to say, look, it hasn't been enough of a distraction to really damage Tesla's business?
I think the thing here that really impressed me is I really do think Elon has been very preoccupied with Twitter, but the Tesla team deserves the credit 100% for this quarter and the achievements that they continue to make. The Tesla team, and you're starting to see a broadening out of the different characters who work at Tesla and starting to get to know these people who have really done a great job despite a lot of adversity last year. And as we go into this next year, it's going to be Tesla's best year ever. So I give credit to the Tesla team, from Martin, Martin Viace, in charge of investor relations, poor guy, to all the different operators, Zach and Drew and the whole team there, just really, really executing and working hard. So I give them a lot of credit.
Absolutely. Despite perceptions that Elon Musk is distracted on Twitter and therefore Tesla's going bankrupt, Tesla continues to produce highly profitable, compelling vehicles that consumers can't wait to get their hands on. Recently announced a massive $3.5 billion investment and massive expansion at the Nevada factory for semi and 4680 cell production. The perception is quite different to the reality.
And Ross, I want to toss to this soundbite we have here from when you were on Yahoo Finance in December, sort of really about navigating this space with Elon. Take a listen.
I'm an investor in Tesla, and I'm going to stay as an investor in Tesla. And I represent my investors who are invested in Tesla and the Tesla community, and we care about Elon. But when your friend goes astray, you can either be the type of friend who doesn't say anything, or you say something and maybe that person doesn't like it so much, but hopefully he understands that I'm trying to do what's best for everybody.
So then, Ross, with that in mind, then, how active do you want to be? Will it require you to get on the board to really see the sort of changes that you'd like to see at Tesla?
Actually not. In fact, it's funny you ran that quote because I think, we did that Twitter Spaces where Elon and I actually had a sort of, I guess, digital face-to-face conversation. And I thought that was incredibly cool of him to just, address me directly and my concerns. And I think he listens to people, hopefully, the people he understands really want to see him succeed, like me. And, I think he's made adjustments. I think Tesla's made some of the adjustments that I want. I'm not unhappy. I was really unhappy in December. I'm not as unhappy because I've seen some of the actions being taken by the company and by Elon to try to deal with this. But I still think there's more to do. But I think as time goes on, this will work itself out, whether I'm on the board or not, to be honest.
I'm a little bit confused here. I'm just kidding. I'm not confused, but let's pretend I'm confused. Ross's comments there on Yahoo Finance went to air on the 21st of December. Tesla's stock continued a little bit lower and since then has rebounded pretty violently as we've seen. Year to date, up 64+%. Not bad. But I'm curious, of all the things that Ross was requesting and or demanding Tesla do, how many of those things did they do? I'm pretty sure 0. I'm pretty sure Tesla stock just rebounded violently and suddenly all's well. Am I misunderstanding here? Was there something that Tesla did that Ross suggested? Or did Tesla's stock just recover and now, no, it's fine now? My investors aren't coming at me with pitchforks. What did I miss? If I were a little more cynical, I might suggest that Ross Gerber's comments about Tesla were really just centered around assuaging the concerns of the investors in his ETF who were coming after him with pitchforks because the fund was down, because Tesla's down, because Elon bad. Of course, that's definitely not the case. I'm sure Ross has a huge list of things that he demanded of Tesla and they've all since happened and therefore that's why he's happy now, not because the stock just rebounded.
I mean, it is going to be important the sort of direction that we see given some of these very ambitious production targets that Elon has for Tesla. How important is it going to be? Obviously, we've had a lot of missed production deadlines with things like the Cybertruck and other things. How important is it going to be credibility-wise for investors to really see these deadlines come through?
Yeah, and that's why I say this is probably the most critical year for Tesla since like the 2018, 2019 period when they were ramping Model 3 production. And it was like, if we don't get this going, we're BK, and now that's obviously not in the cards because Tesla's in such a good financial position. But this is a transition year of growth into the truck business, into the Megapacks business, and as well scaling Model Y production and Cybertruck production. So, I don't think it could be a more challenging year for the team at Tesla. But if they get to the other end of this year and achieve the business plan, boy, this is a huge year for Tesla. And investors have a unique opportunity, even though the stock's rallying today. We value the stock over $200 a share. I think earnings estimates are now too low for Tesla. Everybody's downgraded their estimates. Expectations are very low for Tesla. And, it's rare that we've seen that. So I think for investors who can deal with the volatility of Tesla and Elon, this is a great opportunity.
Absolutely agree. And I also think for investors who can't handle the volatility of Tesla stock and or Elon Musk, they shouldn't own Tesla stock and they should not complain if Tesla stock's moving around violently because they can't handle it. They should just shut the up and buy something that isn't so volatile so their panties don't get in a twist and leave it at that.
And of course, a lot of that assuming that Elon, sticks to his word, doesn't sell any more shares of Tesla, because you're obviously still concerns about some of this Twitter debt coming due. But then in the call, we also saw that CFO Zachary Kirkhorn talking about the company attacking every other area of cost and unwinding cost increases created for these multiple years of COVID-related instability. Where then do you think, or would you like to see Tesla perhaps get more lean so that it can invest more in some of the growth that's needed to meet these production targets?
Well, Tesla's pretty lean, it's not a bloated company in any way.
Absolutely right. Tesla is one of the leanest and most efficient / resourceful companies on the planet. So much so that many of the Tesla Q dolts see Tesla operating expenses, see their revenue climb, and assume their OPEX is too low. The only possible explanation, because thinking hurts, is fraud, accounting fraud. Tesla is committing accounting fraud because they're so efficient with their capital. I see this over and over every quarter. I mean, some of the Tesla Q conspiracy theories are just really out there. Very amusing, but also a little bit sad. But Tesla is an optimization machine. Everywhere they can eke out new efficiencies, save a little bit of money, etc., they'll do it. But Ross makes a great point. They already are one of the most resourceful and efficient companies on the planet.
I think it's really more about their costs for transportation, their costs for inputs like aluminum or lithium and such. So we're seeing all those costs go down, and they do have contracts that are longer term. So how that all works itself out, we'll have to see. But they're relentless cost cutters during the ramp, and we saw this in 2019, where under Jerome Guillion, where as they ramp, they find efficiencies in their production lines that bring down costs. And really, this is where we get to the opportunity of really making a really affordable Tesla one day, maybe like a $25,000 or $30,000 Tesla one day, is really about the scale. And when Elon thinks about scale, he thinks massively. And that's what I think a lot of people underestimate about him, is the massiveness of his vision. And so we expect, costs come down. They seem to want to hold prices where they are, and margins will come back from Q1, which obviously will be impacted.
Always a mixed bag when it comes to Tesla. Hey, Elon, you're doing it wrong. Oh, wait, the stock went up a lot. Hey, I changed my mind. You're doing fine. What I'm trying to say is lots of people have lots of different opinions about Tesla stock, and Elon Musk. I don't think what Craig Irwin says is actually his opinion. There's no way he could possibly believe what he says, so don't know why he says those things. There's probably no financial incentives behind why he says what he says, obviously, because that would be kind of naughty. I also think Ross Gerber, while he makes a lot of great points, and I respect the dude for speaking his mind, has a few glaring blind spots. Then again, don't we all? And I also think, despite Tesla's surge of almost 65% year to date, Tesla stock still represents the best risk-adjusted opportunity in the stock market that I'm personally aware of. And if anyone out there is craving some barbecued mainstream finance media moron, head over to Patreon and check out today's exclusive video. I'm sure it won't disappoint. You can join Patreon with the card in the corner or the link at the pinned comment, and I'll see you over there. Love ya.